So with the FTX drama that's coming in through the crypto industry, we've obviously seen Bitcoin take a price dive. It's gone from around $17,000 all the way down to $15,000. Now, is this directly linked to FTX, or is it just the lost faith in crypto in general? Well, it turns out that Bitcoin miners are actually the ones that sell in the most amount of Bitcoin. In this article, it says Bitcoin miners sell most in 5 years. So this means that they are actually selling the most out of anyone in the 5 years that they have been mining. The bear market has been going for a year now. Who still has the strength to sell their Bitcoin after 365 days of suffering and pain in the crypto market? The simple answer is Bitcoin miners. Rising global electricity prices and the fall in price of Bitcoin have made cryptocurrency mining extremely unprofitable. Retail Bitcoin miners who were hit early by mining costs had to shut down their rigs some time ago. Meanwhile, the current decline in the price of Bitcoin has meant that even large mining pools today have to sell more coins to maintain their business. In today's analysis, Being Crypto looks at the indicators of Bitcoin production cost and the Bitcoin mining sell pressure. In addition, we compare them to the recent breakout of the chart of Bitcoin inflows to exchanges with the Bitcoin network hash rate. So this is kind of linked to the FTX scandal, where Bitcoin is obviously dropping because people are losing faith in the cryptocurrency market because it comes out that the second biggest exchange is basically printing money out of nowhere. There are two main reasons why Bitcoin miners are willing to sell their coins. On the one hand, there are huge profits when Bitcoin prices are high, then increased sales by miners signal a major overvaluation of the cryptocurrency market and usually occur at the end of a long-term bull market. On the other hand, the reason for selling can be extremely low Bitcoin prices. These make maintaining the Bitcoin mining business on the brink of profitability. Bitcoin miners then sell more than usual in order to cover current business costs and stay afloat in the bleeding market. Obviously, we've seen with a lot of crypto mining companies, they're actually starting to sell off a lot of Bitcoin just to cover all the debts that they had accrued in the bull market. The latter situation is being currently observed. On November 9th, Bitcoin fell to a low of $15,588. This has caused even the largest Bitcoin miners who have relatively cheap energy and the best equipment to find themselves at a loss. An indicator which monitors the profitability levels of Bitcoin mining sector is the Bitcoin production cost metric. The indicator includes a red band for Bitcoin price range, below which is mining becomes unprofitable. In the chart, we can see that a drop below and the upper end of the range causes retail Bitcoin miners in the weakest equipment to capitulate. Currently, this level is around $26,000. In contrast, a drop below the lower end of the range causes mining costs to exceed the profit of even the largest miners and the best equipment. So we know that a lot of these big firms have renewable energy and stuff like that, and the cheapest energy that money can buy. So they actually have a lower price to profit, and this is around under $16,000 to be unprofitable. As we can see in this chart here, that red band that they're talking about is the unprofitable band. So right now it's actually unprofitable, obviously, because Bitcoin has taken a dip off. But if you look back in time, you can see that that red band wasn't hit in 2021 and early 2022. It means that the only way to keep mining operations going today is to sell accumulated Bitcoin reserves, which miners can maintain ongoing operations. Such capitulations by miners usually correlate with a bottom in the Bitcoin price. Most recently, the price of Bitcoin fell below the bottom of the Bitcoin production cost indicator and during the crash of March 2020. The indicator correlated with production costs is Bitcoin mining sell pressure. The author of this metric explains that the higher values mean higher than usual selling pressure. Conversely, entering the red area signals for high sell pressure. So basically what I just covered in that chart. On the long-term chart, we can see that Bitcoin miners today are experiencing the highest selling pressure in almost 5 years. The last time the index saw such high levels was at the peak of 2017 bull market and at the end of the 2018 bear market. During the later period, like today, the Bitcoin production cost index reached the levels at the bottom of the band. As you can see in this chart below, it's at the bottom band of the index sell pressure. Subsequently though, Bitcoin miners today are experiencing increased production costs and high levels of selling pressure. This leads to the need to divest some of their reserves, increasing sales and further declines in the price of Bitcoin. In recent days, we have seen a sharp decline in Bitcoin miner reserves. Thus, it seems that declines as a result of FUD associated with the FTX bankruptcy that were mainly driven by miners' capitulation. So obviously with this FTX scandal, as I said previously, this is actually what's causing people to lose faith. And obviously, as people lose faith, they're going to sell off, which means Bitcoin miners need to sell more of their reserves to actually keep afloat and not go bankrupt like FTX. This is confirmed by the chart inflows to the exchange, which come from the known Bitcoin mining pool addresses. The exceptionally high breakout in recent days correlates with the drop of the Bitcoin price, as I just said there. Then it just shows this graph of miner to exchange flow, so which miners are actually going into exchanges and selling. The good news, on the other hand, is that despite the difficulties of Bitcoin miners, the hash rate of Bitcoin network remains at record high levels. This is not actually good because it means that people are actually making less profit if there's more miners on the network. This means that despite ongoing capitulation of miners and low Bitcoin prices, the largest mining pools are still able to maintain their rigs operational. They might actually be mining at a loss, otherwise they might actually have renewable energy which keeping them afloat. With the deluge of bad news, hacks, and bankruptcies of many cryptocurrency companies, it's important to remember that Bitcoin network has never been as secure and resistant to hacking as it is today. So basically, the more miners that are on the network means that the network is more spread out and more decentralized, which means that they have less chance of being hacked. And on mining pool stats, if we look at the Bitcoin mining pool stats, we can see that the top mining pool only has 26% of the known hash rate. So if you wanted to attack a network, normally what you do with Bitcoins is you'd go for a 51% attack. Now 51% means that you have 51% of the network hash rate. Obviously with Bitcoin, it's very hard to accumulate 51% of it because you'd have to hack multiple pools and then have access to that 51%. From there, you can actually change the blocks and basically produce your own network. And that's not what we want with Bitcoin, but obviously it's so big that nobody can actually get a hold of 51% of the network hash rate. However, when you look at coins like SuperZero or Zero Coin, you can see that there's 96% of hash rate on this Zero Cash pool. That means that the network is effectively open to attacks. If somebody gains access to this Zero pool, they can actually use that to make their own blocks and basically hack the network. Lastly, when we look at the price of Bitcoin from a 7-day chart, we were at 21k around a week ago, and then subsequently, since the news of FTX and stuff like that, people have been selling off, and then it took a massive nosedive all the way down to 15,000, around 15,500, something like that was the lowest point that it hit. But it's actually gone up a little bit more, but still, I think this might be the bottoming out of Bitcoin. Obviously, it could go lower, but we don't really think that anything else, unless there's major news like Binance going under, that could put it below what it is right now. 15,500 is obviously a low price, but it'd be nice to see if it went up to around 17,000 and recovered a little bit. So that's it for the video, guys. If you did enjoy, please like and subscribe to the channel. Also, don't forget to check out the recommended video at the end of this video.